Hello everyone, Coach Jay here. In this episode, we're going to talk about the difference in the mindsets and styles of a trader versus the mindset and the style of an investor. As a trader, the mindset is that you're timing the buy and sell of the price of a stock, ETF, or option for profit, whereas an investor, you're purchasing the stock, ETF, or option and using the course of time for profit. Let's break this down by discussing the difference in the holding period, or the time that you're holding the position. As a trader, you would have a high rotation on your positions, such as in and out, or buy and sell in a few seconds, minutes, hours, or even a day or so. As an investor, you would have a low rotation and hold a position for weeks, months, or years. The holding period works in conjunction with your trading plan. So what is your trading plan based on? As a trader, you would be basing your buying and selling of the stock, ETF, or option because of its technical analysis or patterns it's making. As an investor, you would be basing your investment on fundamentals, such as the balance sheet, income statement and cash flow statement, and its earnings per share, EPS, and its price to earning ratio, PE ratio. As a rule of thumb, investors who are looking for long-term growth have typically leaned towards investing in companies that have a positive and ascending EPS, earnings per share, and a PE ratio below 20. As a trader, you would typically purchase a stock, ETF, or option based on the pattern it's making versus its price, as price typically goes away, but the patterns tend to repeat themselves. Whether you're trading or investing, there are always two parts, the purchase and then the risk management piece. So let's discuss the risk management piece. As a trader, you'd be setting a tight stop loss or price that you would sell at a loss to prevent further loss. As an investor, you most likely would have a loose stop loss or any for that matter. In my experience, not having a risk management stop loss plan is a recipe for disaster and would add years to your account growth, especially in a bear market where the market is continuously trending down. Now, being an investor does have its perks. There are some benefits to holding a stock or ETF for a longer period, especially if they pay a dividend. So let's talk about stocks and ETFs that pay dividends. If your intent is to receive a dividend from the dividend-paying stocks or ETFs, then you have to be the owner of that stock 2 days prior to the date of record. We talk about the date of record, ex-dividend date, and about the stock dividend plays in another video. But as a trader, this is irrelevant as you don't hold it that long unless you do the stock dividend play that we discuss in another video. As an investor, this may be the reason you bought the stock for its dividend. But again, without having a stop loss plan, you may receive a 4% dividend for the year, but the stock value may be down 20% for the year. So again, risk management is key. I saved the most important point for last here, and to drive home this point is about rotation. So as a trader, you trade stocks in long and short positions, whereas an investor, you trade in just long positions. As a trader, your time commitment is you're able to trade on a daily basis, perhaps, versus an investor, which is more of a buy and hold strategy. The key to drive home here is this. In bull markets, traders and investors make money. In bear markets, only traders make money unless you've invested in an inverse ETF, which goes up when the market goes down. So one of the crucial steps here to determine as you're starting out is to develop a mindset and a style and a plan based on being a trader or an investor, or two separate plans if you choose to be both. Well, that concludes this episode discussing trading versus investing mindset. We hope this episode provided you an educational guide to then better prepare you to begin your analysis, to confirm direction, to then strategize your trade of a buy or sell. Thanks for joining us, and as always, let's try every day to do something great. Take care, everyone.